Good evening, everyone. My name is Purvangi Jain from Valorum Advisors. We represent the investor relations for Infollion Research Service Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the second half of the financial year 2025. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is probably to educate and bring awareness about the company's fundamental business and half-year financial under review. Now, let me introduce you to the management participating with us in today's earnings call. We have with us Mr. Gaurav Munjal, Managing Director, Mr. Varun Khandelwal, VP Research, Mr. Abhay Sangal, VP Operations, Mr. Abhishek Jha, CFO, and Ms. Madhumita Pramanik, CS and Compliance Officer. Without any delay, I request Mr. Gaurav Munjal to start with his opening remarks. Thank you, and over to you, sir.
Thank you so much, Purvangi. A very warm welcome to everyone who's joining us today for our earnings conference call. So to discuss the performance of the second half of this financial year, which is 25. So I understand there might be a few new participants. So for their benefit, I'll give you a quick brief about the company. So Infollion operates as a marketplace where we connect experts or subject matter experts who are typically senior professionals and freelancers from the industry to companies which are primarily consulting firms, private equity funds, and corporates on an on-demand basis. We have been doing this for almost 15 years, and most of our experts are around 25 years of experience plus. We operate as a platform, as a marketplace where one side gets connected to the other side. The key IP we bring on the table is the ability to predict who knows what. So we have almost 100,000 experts on our panel. 2 years ago, we had about 55, 60 odd thousand. So we've been adding about 15, 20,000 experts every year. And for those who have been with us for a while and who are aware of our company, I'll switch to that. So we had a pretty decent year, no surprises at all. This is almost the fifth year running, actually pre-IPO as well. So a lot of years we have been witnessing a very similar growth rate. So we had a pretty decent year. While we would share the numbers, we had almost 40-50% growth rate over the past few years, and we continue to have that. I'll focus mostly on the operational metrics and leave the financial metrics for my colleague Abhishek to share. So the most interesting thing that has happened in this year is that we have witnessed almost a quarter or even more than that business now being driven by experts primarily outside India. So this was probably in single digits or even lower a few years ago. It became double digits last year, and now I think almost a quarter of our business is being driven by experts, primarily in the US. To support our growing international operations, we established a US subsidiary, which we disclosed earlier. But since we are closing the year, it happened during this financial year. I'll state it again. Also, at least for the last three quarters or so, 2-3 quarters, we have been maintaining a physical presence in US for at least 15 days, if not more, every quarter. So that has our India business has also given us pretty decent growth rates, and combined with US business, this is where we are right now. Our new initiatives, which we had promised at the time of IPO that we would be initiating new peripheral marketplaces or any adjacencies. So for the first year, we experimented a bit. By the end of first year, after 2 or 3 experiments, we kind of zeroed in on learning and development or a training marketplace or upskilling marketplace. And this financial year, we had a pretty decent response, or at least encouraging early responses. So while the revenues are still not material enough, but we have done our research, we have a sizable team now, and I think we would be going a lot deeper in that segment now. On the strategic front, we do have some cash on books. We are actively exploring multiple growth avenues, including growing the current L&D bit. Uh, we are also exploring to build other things within the Infollion umbrella. We're also looking at inorganic opportunities, and we are also looking at buy and build opportunities where we may not acquire something for the revenue, but for the core IP, maybe a early stage company, and then try to build further with the help of our team and our leverage. On the AI driven initiatives, we've been taking a lot of care that we should not go too early, and we should not be left behind as well. One thing which we have figured out is analyst as a service or enhanced search capabilities where we can offer secondary research, data sources, and a mix of different kinds of research agents, and load it with our experts with the help of recordings and transcripts. We think that we are onto something, although it is at a very experimental stage, but that's the direction which we believe has got the best ROI, if I can say, in terms of our time and money. We would not be investing too deep into AI tools like VCs, but we are definitely going to be at the cutting edge of that front wherever we think there is an opportunity available. So, besides that, I think that that's it from my side on the operational bit. I would request my colleague Abhishek, who also takes care of the financials. He would brief you on the detailed numbers for this year. Abhishek, over to you.
Yeah, thanks, Gaurav. Uh, so coming to the financial numbers, it gives me immense pleasure to present our financial performance for the financial year 2024-25. So our gross revenue has witnessed a robust 49% increase, reaching 79.51 crore. EBITDA has grown by 45% to 14.66 crore. PAT has also surged by 45%, reaching 12.44 crore. And positive cash flow from operations stand at 5.62 crore. So this is the achievement we have achieved through our teams, our steadfast commitment to innovation, and our operational discipline. So over to Madhumita. Or Purvangi.
Yes, thank you, Ms. Abhishek. Uh, a reminder to all participants to kindly raise the hand icon if they want to join for the question queue, please. Participants, kindly raise the hand icon. Yes, Mr. Man Ashar, you can go ahead.
Hi Gaurav sir and team. Congrats for very great set of numbers. Sir, I just had two questions. It was more of a request if you could emphasize on the platform part where you were basically exercising some sort of value chain mapping, and then it would be like beneficial for the end customer who's using Infollion platform. It was in a beta phase, so just wanted to understand the progress of the same. And as you said, right, you are basically L&D bit ko thoda you are refining the same, and then analyst as a service and transcript monetization. So I just wanted a more detailed part of that extension, if that's possible.
Okay.
That's it.
Cool. So, first question was the value chain bit. Yes, so we've been we have seen a lot of clients discover a few experts every now and then through that tool. We haven't really integrated that tool into our main dashboard as of now, but we are using it separately. It has got some good responses, but the version which we are using as of now is still the same. While it is a way more developed beta in the sense that clients are using it and there are no it is a very robust beta, if I can say that. But we're yet to integrate it into the main dashboard. We should be doing it this year. Second question was on the Hooksa front. I think I already mentioned that L&D bit is something we don't even know whether to call it L&D or not, to be honest. It is essentially a marketplace of courses. So it could be ed tech, it could be a upskilling thing, or it could be even B2C, it could be even L&D. The key thing is we would be offering a lot of courses with the help of our experts. Now, whether it translates into a short training program or a long-term course, we don't know yet, to be honest. Right? So it was an experiment which we think has kind of given us enough numbers or enough uh, confidence to go deeper. But in terms of material revenue, it doesn't feature in the scheme of things as of now. Your third question was
Transcript monetization and
transcript. So
analyst
no,
as a
I never
service.
use the word transcript monetization. I don't think we are entering that thing right now. What I said was that we would be offering research agents or a marketplace of research agents where we would be listing those various. So what has happened is, and there is a flavor to it. So there is a in the market we have observed that a lot of initiatives happened around AI, right? So there are people who are trying to use secondary data. There are people who are trying to use voice bots. There are people who are trying to do they're trying to offer analyst services. So lots of things happening in AI, right? So what we believe is that analyst as a service or a marketplace of research agents where which we could offer, where we could load various data sources paid and free. We would just be aggregating them. As of now we have no plans to offer them ourselves. uh, Plus we can load it with our experts, that let's say you figure out this particular report or you figure out this particular company, and then you decide to engage an expert, then we would be available with our experts, and you can enhance or enrich your secondary data sources with the recordings and transcripts which would be available with the expert, which you said earlier. What you mean by transcript monetization, I think, is a transcript library. I don't think I said that. We haven't really decided to enter that market as of now.
Got it. Sir, but how it is different from the sell side brokerage is that this guy, matlab, many brokerage houses are doing the same, right? So if you decide, for example, if I were to invest in X company, then I do my primary research and then I go and approach the brokerage houses. It is very similar to what you guys are planning to do the same, right?
Not sure if you're referring to the same thing, but what we are essentially planning is company reports on demand.
Company reports on demand. Okay, okay. Yeah, yeah, that's very similar. Okay. That helps, sir. Thank you so much. All the very
As
best.
of now, again, it's an experiment. I mean, maybe in the next earning calls we may say that it didn't work out. As of now,
No
it's a
worries.
very early stage. Yeah,
No worries, sir. Thank you so much.
cool. Thank you.
Thank you. Next person, Mr. Siddharth Gangal, please go ahead.
Hi, team. Congrats on a great set of numbers. I wanted to ask how your US go-to-market is going. Given going to market in US is expensive and, there are, I'm sure, already entrenched competition. So what's the strategy and, how do you see this part of the business actually scaling up over the years? And what percentage of revenue will this account for?
So I think we're reasonably happy with what's going on in US. In fact, as I said, the surprising part was that a lot of Indian clients are using US experts, which we didn't expect. So we probably expected we would need more money to make the network over there. But thankfully, Indian clients have been kind enough that they are trying to use a lot of US experts. So while it may not be classified as US revenue, but it is definitely a big chunk of our revenue because of US experts. So my sense is that your question is more about generating revenue from US. So it is a typical marketplace here. So both sides move together. We have already made some strides. Our network of experts in US is sizable now. I think Abhishek would or the numbers, the precise numbers would be there in the presentation as well. Uh, we would be focusing on 2 or 3 domains. We are already going deep into them, starting with those 2 3 domains, mapping those experts to those domains, and then doing custom. So a fairly standard playbook as of now. We believe we have the right to win for a lot of reasons. One, we do a fair amount of tech. Two, we think that our mapping is much better. Our approach to business is much better. Our approach of reusing the experts brings down the cost without compromising on the quality. That definitely helps. uh, so we believe that over a period of time, we should be able to get those network effects, which we have already got some of them in India.
Sure. Thank you.
Thank you. Next question is from Mr. Neeraj.
Yeah, hello. Can you hear me?
Yes, Neeraj, please go ahead.
Yeah. Hi, Gaurav. Thank you for the opportunity and congrats to you and the team for, great set of numbers. Just a couple of bookkeeping questions and then a couple, on the strategic side. I'm not sure if you disclose the numbers, but what was our expert call count in FY'25?
नहीं exact दिया ना 16,000 something
Okay.
कुछ दिया होगा.
Okay.
Okay.
Maybe I missed that number. Thank you. And experts register as of March?
वो भी दिया होगा. Exact numbers. All of them are on the very precise numbers are there on the.
About 104,000 experts are there on the panel now.
Understood.
तो
Understood.
breakup भी होगा.
Yeah.
Understood. Understood. And maybe Gaurav, like previously, we have spoken about our US expansion, and there has been slight concerns around, within the investor community is around how big is the market size, because we are growing 40-50%. So can you believe we can grow at a similar pace or maybe around 30% plus minus over the next 3-4 years? Or do you think as we grow, our base also becomes large, so it might incrementally be difficult to continue the same pace?
So this is a question which we have been facing for a long time here. So while the Indian market is likely to grow at a healthy click, we have been aggregating a lot of market share from Indian, but we are still far from saturation within India, both in terms of market share, in terms of client adoption of this business, as well as the size of a business what a India market can reach. Having said that, I think a lot of growth we are expecting from peripheral marketplaces and US markets. The core market, of course, is not very large, but you would be surprised to see the numbers which the consulting firms have been putting up.
Understood. And Gaurav, when we try to, explore those adjacent markets, do we think that, our margins might compress? And I'm not saying margins might compress in the near term, as we expand, it might compress. But over the medium term, can they compress as we explore these adjacent areas?
Well, to be honest, the very term explore means that we would still figure out those numbers. Uh, it depends. I mean, whatever market we decide to enter, it depends how what is the leverage we have from our existing panel. If we do not have leverage, then uh, uh, initially we would go at the premium end. So my sense is that the kind of experts we have, uh, usually we have been operating in a we are expecting to operate in a not very sensitive price sensitive market. It is more about the availability of an expert and the availability of the course. If you're talking about L&D, as of now we have no plans to get into those mass market L&D thing. uh, Even bespoke courses we expect sizable margins, but can we predict as of now? I think it is just too tough even for me. Once it settles down, maybe a few years down the line, where we have some data to back us, we would be able to predict better. But at this stage, I can't really comment on what are the kind of margins and growth I can expect from markets which we are exploring.
Fair enough. Maybe the last question, and then I will get back in queue. Gaurav, if I compare our H2 versus H1 on a sequential basis, our revenues grew around 20%. Uh, Last year, maybe the revenue growth was, around 4%, H2 versus H1. I'm comparing sequentially. So, and in our previous conversations, I remember, Gaurav, you mentioned that H2 is seasonally slight weak because of Christmas, because of holidays. So what happened this year, like 20% sequentially is a very, very solid growth. So can you touch a bit more on this?
Well, to be honest, it's a good problem to have, but I don't think I have a very concrete answer. We just continued to grow. Maybe we added at a different pace, but I don't really have a very concrete answer. Uh, but that's true that due to Christmas, New Year's, Diwali season, it is a little subdued because of. So we work on an working day basis, right? So working days
Correct.
are far more in the first half. So so maybe we kind of grew a little faster compared to April 2024 to March 2023 on a monthly basis, but uh, or maybe if we go deeper, maybe the dates were a bit different. I don't know, to be honest.
Fair enough. Thank you so much, Gaurav and team. I will be back in queue. Thank you so much. All the best.
A request to all participants to limit their questions to 2 per person, please. Thank you. Next, we have Mr. Rohit Balakrishnan. Please go ahead, sir.
Hello, am I audible?
Yes, Rohit, please go ahead.
Hi, Gaurav. Hi. Congratulations to you and your team for fantastic numbers. So, Gaurav, just one question on like we were trying to get expand into the financial services space in India. So, any update if you can share? How has that been?
Yes, we've been adding clients there. I think as a percentage, it should have increased. I'm not sure. So as a percentage, we've been adding a few clients. We've identified some set of clients where we think we haven't really gone after the long tail yet.
Right.
But for the larger companies, we have been trying, and I think we have been successful.
Okay, so you are able to get like
We are able to
share
penetrate.
there. Got it. Got it. Is I mean, will it be possible to give any numbers, or do you think it's too early to share numbers in terms of share, etc.?
See, उसमें होता क्या है? So a lot of times there are indirect numbers as well, right? So a lot of these financial clients use consulting firms as a front. So there are some gray areas as well, right? How to who's billing, but who's actually where is the revenue coming from, etc. So, but as a growth trend, we have definitely seen that we are gaining share in the private equity bit. In the public markets, large funds, yes, but for smaller funds, we're still figuring out the right product. We haven't really gone to for the long tail, like less than 20 calls a year or less than 40 calls a year. Because it is a very B2B setup, so it is a very expensive setup to do that. So we are trying to work through a demand aggregation route as well, which we might address through Hooksa, where we can offer multiple funds at the same time. So that's something which we are exploring. But as such, I believe that the financial market is a much smaller market for expert calls.
Got it.
In India, at least. Globally, it may not be true, but in India, I think the financial world is much smaller as a person.
And just related to this, Gaurav, I think you also mentioned to answer as an answer to the previous question in terms of market saturation and market opportunity. Globally, a lot of I mean, not just investment players, but financial services also use expert networks, especially underwriters, etc. So, have you started seeing some semblance of usage there, or it's
So
still?
we do believe that the market adoption would increase.
And any initial signs you're seeing, like adoption wise?
Yes, we do get some inbound queries. Are they sizable enough? No. A lot of corporates seek external experts from us. Underwriters, I'm not so sure yet. But in general, as the what we have seen is a lot of small funds who were earlier in a few hundred crores AUM are moving towards a few thousand crores AUM over the last 5 years. I
Right.
see no reason for them to not use it at some point.
Got it. And one more question related to just the Indian
So,
market.
sorry, Mr. Rohit, I request you to come back in queue, please.
Sure, I'll come back. Sure.
Thank you. Next, Mr. Shikhar Mundra, kindly go ahead.
Hi, Gaurav. Congrats on a good set of numbers. So for this increase in employee cost from 11 crore to 17 crores, what has been the for comparing year on year? What has been the proportionate increase in the number of employees, and how much of this has been for the US expansion?
Okay, so the increase in employees, yes. So the US team has expanded much more faster as compared to the Indian team. Indian team, we still have a very high PE percentage. So I'm not sure I have the exact numbers. Abhishek, have you disclosed the precise numbers? If not,
No, Gaurav, we are not disclosed yet.
so overall, a quick answer is that yes, US team has increased. We have also added a fair amount of team in our new initiatives. We have also built up a tech team, so it may not be entirely proportional, but in terms of our original research team, it would actually not just be proportional; it would actually be lower than that. Is my overall number, in the sense that
Got it.
at a per person research team for India, which is bulk of our revenue coming from, I think we would have been same, if not better.
Right. And is the US generating revenues as of now? I joined a little late, so I missed it.
So as I mentioned, more than a quarter of our revenue is being generated from experts based in US.
Okay. Okay.
So there are a lot of teams which are working overnight now.
And how much are we spending on the US expansion? I mean, how much did we spend this year? I mean, apart from the employees.
So we have a very sizable team.
Okay.
No, we have been traveling to US. We've been setting up the subsidiary. A lot of things happening. The precise numbers are already shared, but the number which we had allocated for US expansion in our IPO proceeds, I think we're almost done with that.
So most of it was expensed out, it was not capitalized, it's in my understanding.
Yeah, correct.
Okay. Got it. And what is the 2.37 crores of intangible assets? Like, is it for the Haxa which we are developing?
No, it was for the information IT development expenses, like the dashboard and software that we have developed internally.
And is that supposed to be continued also? I mean, even this year we'll be developing some of it.
Yes.
No, I think Abhishek, the development work is mostly over. A little bit of
Yeah.
additions would be there. We would be working on the Huxa tech development. We would be working on the discovery tools, but our core investment into the tech part is broadly behind us.
The put to use thing is done now. We have been using it for a while.
So
Got it.
everything is automated now. So the workflows, the payments, so bulk of it is done from our side.
Got it. Got it. Thank you. All the best.
Thank you.
Thank you. Mr. Chinmay, please go ahead.
Hello. Good evening, team. I hope I'm audible.
Yes, Chinna, please go ahead.
So my question is on the receivables. The receivables seem to have increased in the second half. Any color around this?
Yes, Gaurav, I should answer.
Yes, please.
Yeah. So if we see the absolute number, yes, it has increased, but I think we should see it as a percentage of sales. You won't find any such difference between if we look at it as a percentage of sales.
I mean, if I compare it
Yeah,
with the debtor days in FY 23
correct.
and 24,
Correct. Not much
so it
difference.
was So it was 64 days in FY'23, 78 days in FY'24, and 83 days for the full year FY'25.
Yeah.
So
He's
nothing
saying
nothing
83.
64, the 64 figure has come because we have been using the billed revenue only. So from FY 23-24, we had adopted the revenue recognition model of using unbilled revenue as well. So that's why it had increased last year. So yes, it had increased by almost 4-5 days this year also.
Sir, would it be possible to explain how the billing cycle and the collection cycle work?
Yeah, yes. So billing, see, the entire process is like the call. Once we receive the calls log, it is sent for the approval. Then the calls are invoiced after approval. So these things take time. So that's why the days looks inflated. But if you see the once the calls are billed and till realization, it's roughly about 25 days on an average. So the additional 50-55 days are for the call date till the approval date and everything.
Okay, got it. Thanks.
Thank you,
At
Mr.
a broad level, I don't think anything has changed significantly from what I am aware. The invoices are being raised on time and we are getting
Yeah.
on time. I don't see a significant change. You could also compare sometimes there has been a significant increase in revenues from April to March within the year. So when you're dividing it over the year, it doesn't really make sense. And especially this year, second half has been good. So probably it is looking a little higher. Had we had a very similar number as last year, our those numbers when when divided on a whole year thing would have been very similar to last year. So we got 20% growth. So uh, uh, the numerator increased a lot as compared to the denominator.
Okay, sir, got it. I'll fall back in the queue.
Thank you. Mr. Gaurav Nigam, please go ahead.
Yeah, hi. Am I audible?
Yes, Gaurav. Hi.
Yeah, hi, Gaurav. Thank you for taking my question. Just two quick questions. One is on so if I look at in the last 2 years, we have diversified from our India expert network business to not now having non-India business on expert network side and on the Hoxa side, right? Uh, these are the two diversification, right? I just wanted to understand for our original business, which was there, I mean, pre-IPO, how does the profitability look like, I mean, then to now? And what is the drag on our profitability because of the newer things that we are experimenting on? I mean, any sense, even if you don't quantify, it's fine. Just give
Fair
me a
enough.
sense of how it is.
Well, to be honest, Hooksa, I think is not significant enough both in terms of investments as well as revenues. We have been just using the IPO proceeds to an extent. We've been making some money, so it should not be significant. On the other bit, non-US, so US based revenue, it's actually very similar in profitability as India ones. At least from a top level perspective, you won't see any changes. Just the ticket size is a little higher, but the percentages would be very similar.
Got it. Got it. Got it. And the employee expenses, just a continuing on the employee expenses that we are doing since we are investing ahead of the revenue. I think that's what my thought process. So I thought that there would be a drag, but you're saying there is not.
So gross is not a drag. Maybe a little bit of expenses could be there, but then there are a lot of things where there is no a significant clear line that this is a US expense and this is an India expense.
Got it. Understood. And the second question was on the number of clients that we are trying to gather in the US, right? Not the expert, that the client. What has been the traction there? I mean, what are the learnings? I mean,
Oh,
anything
that's
which is
a
going right, which is not going right? Sense.
no. So we after the subsidiary bit, we have been traveling. As I said, every quarter we have been spending time there. We would probably ramp it up further as well this year, and at a appropriate time we would hire people there. But as of now, we think that it's a little too premature to hire and spend too much over there. But we have the money. The moment we realize, we feel that there is enough traction, we would hire there. But or maybe we would, but we would definitely travel more often and spend time in US. Have we started generating revenue from US offices? Not yet.
Got it.
But we
Understood.
have made a lot of contacts there. This is a very B2B long gestation kind of a thing. It should materialize over the next few years. The
Understood.
initial few years are far more difficult than the further scaling up ones.
Correct. Understood. What is the
If we
total
sign
number
up
of
the contract with clients, it becomes relatively easier. The difficult part is from introduction to signing up of the contract.
Yeah. Understood. And what is the total number of employees that we have as of 31st March 25?
Abhishek, we have disclosed that?
Yeah, as on
So
31st
roughly
March.
200 now.
Okay. Understood. Maybe I'll wait for the annual report then.
Yeah, but roughly 200 plus minus few.
Okay. Sure. Thank you.
Thank you. Mr. Harsh, please go ahead.
Yes, congratulations, Gaurav, on great set of numbers. And just have couple of questions. One is, you mentioned that you would be looking for some inorganic acquisitions to utilize cash. Could you just put some light as to what kind of companies you would look at and what direction, you would look for these acquisitions?
Oh yes, so that is very helpful. A lot of investors have asked this, and they've even referred us a few companies. So I'll just quickly try to use this occasion. Uh, just give me a second. I'll read it out for you. So essentially, we have two or three categories where we look for, right? So first is the HR services category. The second is the peripheral marketplaces where we can leverage our current capabilities, and then there are three. The third category is AI initiatives. AI initiatives are mostly going to be built, not really buy. It's just too expensive. But the first two categories is where we are actively exploring. HR services, it could be L&D, training companies, any kind of instructional design companies, or VR simulation, etc. We are also exploring a managed training services market. NIT Learning is a very large player in that. We are also exploring, not at that scale, to be honest. We don't really have the capabilities yet, but that's a market which we are exploring. Uh, a very different kind of HR services where we could get some inroads into the HR world uh, is like mice and offsites, etc. Is also something which we are exploring. And the second category, peripheral marketplaces, I would say one of which we are already developing, which is build, but we are always open to some kind of low value, high volume gig marketplaces, some blue collar marketplaces, or even a trainer marketplaces, or corporate venue marketplaces, or even training venues marketplaces. So these are the broad areas which we are exploring besides anything in the HR tech world. Uh, uh, Essentially, we are looking as a inroad uh, where we can you know uh, use the existing relationships to offer more training services, because we believe that we already have the supply side settled from by experts. What we are looking out for is uh, some kind of vendor relationships which they have with a lot of technical or tech heavy companies in the country. So these are the broad list. Small companies, maybe a few crores, is something which we would be looking for. Both inorganic as well as some kind of tie-ups.
Got it. Thank you. And just one more question around the US market. Like you mentioned, we are seeing good traction from Indian customers using US experts. So, is there a possibility to see a higher margin going forward, because of higher realizations in these set of experts, or you have optimized the margins to make sure you get good volumes and margins could still be similar range?
Well, to be honest, we definitely do not expect a very high margins because that's how we have been doing it. There is scope for higher margins in US. In India, it is quite competitive, so we would like to stay the same. We would not like to leave any opportunity on the table for our competitors. In US, there is scope for margins because there are very few companies who work on low margins in US. But as of now, I think we don't see too much variation in the margins in our core business as well as our India to US business in general
Got
from
it.
our
Okay.
historical numbers compared to our historical numbers.
Thank you.
Thank you. Yes, Mr. Rohit, please go ahead.
Yeah, am I audible?
Yes, Rohit, please go ahead.
Yeah, so just two questions. One was in terms of competition in India, uh, given now that you're public and I guess everybody's seeing your numbers. So are you seeing anybody like competition heating up or anything on that front? If you can share, either the global guys becoming more aggressive or anything on that front. Uh, that was one question, and then I'll ask my second one after that. Maybe.
Well, the competitive intensity in India, uh, my sense is that we have been actually growing faster than even our smaller peers. Although I do not have the precise numbers, but anyone who's in single digit crores or double digit crores, we have actually averaged faster or clocked a higher growth rate. Uh, Global peers, any increasing the competitive intensity in India, I don't think so. It has been pretty much the same. Fundamentally, they operate on a far more margin, 70-75 margins. They're completely priced out of the market, most of them. Those who are not priced out of the market are the ones who have access to global experts whom we don't have. So that's something that's a muscle which we are building. Hopefully, we would be able to push them out, test them out in years to come.
Got it. And on your two new initiatives, one Huxa and the US as well. So first on Huxa, do you think this? So you said that whatever you are getting in terms of the experiments that you're doing, you're getting positive response from there. So from here on, what are the next steps, maybe for next 6 months or for this financial year from that for that vertical, and then I'll ask the US after this.
See, to be honest, we're still figuring out the product market fit. We are experimenting from a lot of ways. We are making modules. We are doing long tail financial investors. We are doing corporate L&D. We are doing bespoke courses. We are doing executive succession planning. So we're trying out a lot of new things. We are not going to jump in on any specific thing as of now. In fact, we are even building a repository of AI courses as well. So we are not going to back ourselves too early to generate revenue. We'll just evaluate areas where we think the customer acquisition cost is not extremely dependent on performance marketing. So once we establish that side, be it through vendor relationship through our clients or some specific brand names which only we have, or owning specific IP of certain kind of courses, uh, in short, I think we are still figuring out the product market fit. The only thing I can say for which I'm 100% sure is now we are going to operate in that market, in the training slash upskilling slash market for a while now. The experiment stage is over, but have you figured out the market yet? No.
Got it. Got it. No, fair enough. And just on US, you mentioned in the call that you got revenues from the US experts. already Indian companies are using US experts, so that is a good start. But from signing up US clients and signing up people from there, how far you are from there, your sense, given that the team built out as has started to happen and you're expanding there and already expanded a fair bit. So any sense you think from your vantage point is financial year 26, will we see a US client signing up?
It's very difficult to put a number on which year, but we did expect the first few years to be tough. They've been relatively easier than what we thought, so that's the only good point. But I think regular supply will happen only when we maintain more physical presence over there. The short answer is I don't think it's a good idea to predict when we would be
No,
having
actually,
substantial revenue.
no, sure, no. Actually, what my let me rephrase my question. Actually, my question, my what I was trying to ask is, so to get to like signing up regular clients, what else? What are the things that we need to do? How far we are from that journey? So let's say if it's a 10-step process where we are.
Fair
How many
enough.
steps
So
are
I
we?
get the point. So from that perspective, we're not too far. I think we're ready. We're ready from that perspective. It's just a B2B sales process, yeah. It's a heavily regulated environment. And as you all obviously know that there are a lot of good players already over there. So we'll have to prove ourselves with one or two teams before they sign up long-term contracts. It is a long gestation kind of a process. We should be able to
Sure.
get there, but I do not have the visibility right now.
No, fair enough. No, I think I got my answer. Okay. Thank you, Gaurav, and all the very best. Thanks for being candid. Thanks.
Thank you. A reminder to all participants to raise the hand icon, please. Yes, Mr. Shikhar.
You said 1/4 of your revenues came from
Experts
Indian
based in
clients,
US.
but US experts, right? So
Experts based outside India, primarily US. That's the
so
precise word I used.
and if I remove that, so it's roughly around 50 to 55 crore of revenues is basically from Indian experts to Indian clients.
I would say so, yes. No,
But
so hold on. So what happens is, yeah, but you can assume that's a range.
right. So if I compare it to last year, so last year FY'24, we were purely Indian experts and Indian clients, right? We didn't have experts abroad.
No, we were already in double digits last year. So what you can do is you can divide you can figure out the ratio of expenses between money which we are paying to experts outside India to money which we are paying to experts within India. So then that will give you a sense of how it has been progressing over the last few years.
Okay. And is there a significant difference in growth rates the way we are growing? I mean, Indian clients, Indian experts versus experts abroad to Indian clients?
We're seeing steady growth rate from Indian clients.
Okay, got it. And coming back to the employees part, I mean, this year we must have made some additional expenses in the employees, since we are setting up our expansions in US. So just trying to figure out, won't there be an operating leverage if we are able to, scale up our US business? So won't we see an increase in margins?
Maybe yes, but I think at least the gross margins are not going to be significantly different. If we impanel an expert in India at 20,000 rupees, we try to sell at 40. If we impanel an expert in US at $400, we try to sell at 800 or a little lesser. But fundamentally, if we compare our margin profile to for US clients, US experts, which is a very small part as of now, it is going to be much lower than our US peers.
Okay. No, gross margins I can understand, but on a EBITDA level, won't we see a big jump because employee costs, basically our backend team is a major part of our expense post the gross profit. So now we are already on 17 crores of employee
No,
expenses.
if we do that, we would rather increase the cost and go for further expansion.
Okay, all right. All right. Thank you.
Thank you. Since there are no further questions, I request Gaurav sir to give his closing remarks.
Thank you, Purvangi. So, thank you everyone for joining the call. Hope I've been able to answer all the questions. We have been trying very hard to live up to your expectations. Thanks for being a part of this journey. Uh, Hopefully, for the years to come, we should be able to continue the continue the journey in the same way which we've been doing for the last few years. Thanks a lot, everyone, for joining the call. We would be giving more details out, at least my thoughts in the annual reports, etc. Thank you, everyone. Purvangi, we can close there.
Yes, sir. Thank you. Thank you everyone for participating in today's call.